The tax deadline passed a little over 2 weeks ago, and a lot of us, instead of celebrating a generous IRS refund, we were actually not that happy because we owed a lot of money back to IRS. How did that happen? Nothing much has changed with our jobs. Well, there are a lot of reasons to it, and that's exactly what we will be unpacking on this discussion. Hello there, my name is Neha Mahajan. I am the Business Development and Outreach Manager at Chug LLP Attorneys and CPAs, and joining me all the way from LA is our speaker, CPA, Dimple Sankhla. Hi there, Dimple, welcome.
Hi, Neha, thank you.
Yeah, the weather in New Jersey today is hot. I mean, 74 degrees for New Jersey standards is scorching hot. I hope you're nice and cool there in LA.
We're always nice and cool.
That's good to know. But I'm sure the tax season wasn't that nice and cold for you.
No, it wasn't. It was very stressful, honestly. Yeah.
Yeah, but that's behind us now.
Yes, it was challenging but fun as well. So
right. Dimple, a lot of people actually in my circle, they came to me and they were like, Neha, this is probably one of the first years ever that we've owed so much to IRS. Typically, these people have always kind of had a generous, refund from IRS. And this was probably the first time that they had to owe. They owed IRS a huge amount, right? A hefty amount. I'm sure you've seen such cases with you.
Yes, I've seen multiple this year. And there are various reasons for this. Well, of course, COVID, number one, changed a lot of things, and a lot of laws changed, although for the better, but many people lost their jobs and were on unemployment, and especially the low income made more in unemployment than they did with their jobs, and they didn't probably realize that the unemployment compensation was taxable. So they did not expect to see a big bill. That's just one of the reasons. There are many more, like stock trading was very hot, and we'll discuss that more hopefully later. And people made money not realizing how it would impact their taxes. These are some of the reasons, to begin with, and then it depends on the individual scenario.
Yeah, absolutely. And you brought some really interesting points. Absolutely. A lot of people, we heard this in news. Obviously, we didn't know anybody. I didn't know anybody near me who had to deal with this. But yeah, a lot of people who were on unemployment actually got more money than they would ever make, right? Through their own jobs. And also, stock market was super famous. Like everybody I knew was trading. Everybody, whether they were making profits or not, I don't know about that, but yes, people were into trading like there was no tomorrow, right?
That is correct. So the stock market was booming, and I believe work from home gave people a lot more flexibility to work and trade at the same time. So,
yeah.
And then, people were trading. People who have never probably traded in their life came to me with several 1099Bs with, income. And then they had no idea how taxes would impact.
Come out for them. Yes, absolutely, Dimple, and that's exactly what we are going to be discussing today. For all of you who are joining us, you're watching us live on YouTube, LinkedIn, and Facebook. We're absolutely live right now, like we do every week, every Thursday, 2 p.m. Eastern Time, 11 a.m. Pacific Time. So if you're joining us and wondering what we are talking, well, today we're going to be talking about taxes. Yes, the tax season has passed away. We've come into the post-tax season, but a lot of people were wondering why they owed so much to IRS instead of celebrating a generous refund, and that's exactly why we have CPA Dimple Sankhla with us today. So hang on tight. We'll be answering some of your questions, and if you have those questions, send them to us in the comment section below. If you're watching a recorded version, be sure to send us your email, info@chug.com. That's info at chugh.com. Also want to, say this, if there's a disclaimer that the discussion today is for informational purposes only, and whatever we are discussing today does not create a CPA-client relationship. Now, Dimple, for everybody's benefit, right? Let's just understand the very basics of how tax works in this country, right? Because like you said, people have been living here for many, many years, right? And they traded, like because they had not traded before and they had time because they were working from home and all of that. There's something called tax withholding, right? What is tax
Right.
withholding?
So tax withholding basically means that you're paying tax in advance for the income you earn because you'll eventually owe some taxes on the income. Now, the IRS, the government, also functions year round and they need funding year round. So they cannot wait for everybody to just go pay their taxes March of every year. That would be very unfair. And they also need, just like how we need our paychecks every 2 weeks, they also need to get paid to run the organization. So they want you to pay taxes in advance as you earn. So usually withholding occurs at jobs at the salary level. The employer withholds certain taxes based on the information you provide them, and then they remit it to the IRS periodically so that the
Right.
IRS can also function.
All right. Okay. And can IRS actually overestimate tax withholding?
I believe they can, and they may have been. For the simple reason, if you see, 70% of Americans at the end of when they're filing are getting a refund is because some of the withholdings may have been overestimated. So, yes, there is a good possibility that often the taxes are overestimated, especially for salaried employees. Self-employed have to make their own estimated payments. So it depends if they're estimating it or underestimating it.
That's a very interesting point. See, that's why it helps that you are here on board with me today and we're discussing all of this. And audience, if you have any questions for us, if you're watching us and are thinking of a CPA tax related question, our CPR expert is here. Feel free to send us your questions. We'll be happy to answer them. Now, like we discussed at the beginning of our discussion today, right? People owe IRS for a lot of reasons, right? What are some of those reasons?
So,
Especially this year with all the changes that came by.
right. So let me, start by saying first point, unemployment income. Many have unemployment income. The withholdings were not enough. I believe automatically if you opted for withholding, it was probably 10%, and then one had to go and elect for additional withholdings. But at that time, when people had cash crunch, they were not having any taxes withheld or very, very little taxes withheld. So, unemployment income is taxable income. It's unearned taxable income. And some states do not tax it, but some do. So there's both state taxes and federal taxes that come into play when you're filing. So, this is something that people were not aware of. Although some of it started in 2020 tax year, but 2021, I saw a lot more people claiming unemployment and, facing this while filing.
Right.
So that's one pointer.
Yeah.
The second point is, although I would not say that people are seeing lower refunds or having to pay, but they did not realize that child tax credit that they're used to getting in a lump sum at the end of, while filing was paid in advance in the prior year in 2021 itself. From June through December, half of it was paid in advance. So, it's not the full amount that they're claiming on their refunds. So psychologically also, they feel that the refund is lower. The third and the most important point, I think, is the earned income tax credit, especially for the low income brackets. When they were in a certain income bracket and qualified, and especially if they have children, in 2021, say they had no income, but they had unemployment. So unemployment does not count as earned income, and a lot of them kind of disqualified for the earned income tax credit, although there is an election to choose the 2019 income, but some of them didn't have income then, So yeah, that's one of the biggest pointers. for
Right.
not
And
seeing
also,
the kind of refund.
yeah, and also I guess job changes. I mean, unemployment is definitely part of job changes if you think of it that ways. But I guess right now, especially since in the last 6 months we've been hearing of the Great Resignation. We've been hearing of how people are changing jobs. Does that impact taxation as well?
It probably does because I think there are a lot more opportunities and there's dearth of employees. People are hiring and employers are even paying more. And, so maybe, people are getting higher pay but are not withholding as much or not paying estimated taxes enough. So that probably is also a reason that they may have seen a bigger bill.
Right. And also, a lot of people who've always received earned income credit, right? They did not receive any this year. Why is that?
Well, like I said, that unemployment and even trading income, although they may have made money, are all
Yeah.
unearned income and do not qualify you solely for the earned income tax credit. And also because some of them may have made the same amount of wages they did earlier, but they had the unearned income such as capital gains, dividend income, which we saw a lot more in 2021.
Right.
So
Yeah.
that put them above the threshold to qualify for earned income tax credit. And
Got
then
it.
the refund just, fell from, few $1,000s to maybe owing, a couple hundred.
Right. That's a very interesting point. Now, we spoke about stock trading. I wanted to go into a little detail so that, people who are trading at this point, I mean, of course, they probably learned their lesson when they owed all those taxes, right? But for those who are getting into trading now, right, jumping on the bandwagon now, what kind of things should they watch out for, especially so that they are aware of the kind of income they're making and how much they might owe to IRS?
So the most common thing I see is something called wash sales loss disallowed. So people, when they were trading short term last year, say they were buying a certain security and then selling it at a loss. So thinking that they could take that loss in their tax return for that tax year. But if they bought a similar, substantially identical security within 30 days before or after selling for a loss, the loss was not allowed to be taken in that tax year. So although they have a loss in their bank, they don't have the money in the pocket, but on paper, they have a gain. So watch out for these things. Do, be careful when, reach out to your brokerage company, find out what qualifies for, what qualifies as substantially identical security. Be careful of your trading habits. And of course, short-term gains are taxed at a much higher rate, at your ordinary income tax rate. Long-term capital gains are taxed at more favorable tax rates from 0 to 20%. But, the idea for most people was to make a, quick buck. They made money and they paid more in income tax. So yeah, these are the things to keep in mind, long-term versus short-term, taking care of wash sales loss, getting more educated about it.
All right, that's exactly why you need a CPA on board so that a CPA can guide you in the right direction. A tax consultant can guide you in the right direction. So if you are scratching your head and wondering why you owed so much to the IRS this year, although you didn't do good in the stock market, you were showing losses. Well, you just heard the answer, right? Dimple, we are seeing some audience questions right now. And there's this one question, and the person wants to know, I was awarded restricted stock units that I haven't sold. Why are my taxes so high?
So that's one common trend I saw again this year. Big companies, public companies like Apple, Google, Facebook, they've been very generous with their award for restricted stock units. I've seen many W-2s. So restricted stock units are stocks that you can compare to like a cash bonus. that your employer gives you, the day they vest, as in the day they're awarded, they're transferred or delivered to you, is the day they become income to you, supplemental income, and go on your W-2. And supplemental income withholding is more or less around 22%, but some of them can put you on a much higher income tax bracket, more above the 22%. So although you have that stock on paper, I know it's January, February, and the stock price is not as great as what it was when you were awarded. You feel you lost money, you're holding it. I would say hold it if you think it's going to do well, but that was already income to you the day it was awarded to you, and you have to pay your income tax on that. So there's, unfortunately, it is what it is. But if the stock price went up with the restricted stock unit, you would be really excited and happy and sell it. And then when you sell it, the only tax you pay is the capital gain tax, as long as you hold it for a long term, more than a year. If you sell it within a year, it's short term, again taxed at your ordinary income tax. So yeah, it's a curse. It's a boon and maybe a curse sometimes, but yeah, that's what I saw, a very common trend with restricted stock units and higher tax liabilities.
That makes so much sense. Now that you're explaining it, and you've explained it so well right now, Dimple, it just makes so much sense. So everybody, if you get stock options, those are taxable, right? You don't have to wait until they get vested. The day you receive them, right? They are, you have to show them as a taxable item, right? They become part of your W-2. There's another question coming in. Cryptocurrency was so big. Oh my God, Bitcoin, everybody's heart was beating. Oh my God, Bitcoin's rising high, going low. People were losing money like crazy. So this one question is, I traded cryptocurrency but did not receive any 1099B. Do I need to report this income?
Yes, absolutely. So with the form 1040, on the face of the form is a question, did you trade in virtual currency? And it's a very important question. And IRS expects you to self-report any crypto gains and losses, irrespective of whether you received a tax form. So answering that question and then reporting to the best of your knowledge your gains and losses in crypto is the right thing to do and a must do. People have also made money in crypto. I know something like Coinbase hasn't been giving 1099Bs, and people have traded and had difficulty coming up with the transaction to come to the final figures as to cost basis, sales price, and gain or loss. But for smaller traders in Coinbase, this coin tracker that you can use for free to get your final numbers if there's no 1099B. But yeah, do your best and report your crypto trading.
Report every penny that you make, whether it's on crypto, whether you're doing it through other sources, whatever sources it is. It needs to be reported to IRS. Okay, there's another question. We're getting this from LinkedIn right now. Many taxpayers may have earned more but did not adjust their tax withholdings. So they paid the same percentage of tax that they did in the past but earned more. So they should have withheld more. Decrease in SALT, SALT, and property tax deduction has increased taxes due as well, causing refunds to decrease. Is that true? I mean, what's your comment on it?
That is correct. So if suppose you haven't changed jobs for many years, then you've probably not provided a new W-4 to your employer. The Tax Act and the Job Cuts changed a lot of things, and a new W-4 was also, there was a new W-4 provided, but those who didn't change jobs did not really furnish a new W-4 to their employers. So the withholdings are based on the old laws and rules, which are not applicable anymore. So it is very important that one must, revise the W-4 with the employer so that the withholdings can be more appropriate. The new W4 asks many, many questions regarding your tax situation, including, if you're married or not, if your spouse has an income, and it asks you simple, basic questions regarding your entire situation, and then calculates the withholding appropriately. So yes, it's very important, and that statement is totally correct. That not enough withholdings are being done for many people, and they're probably not aware that they do need to revise the W4s with their employer.
Right. So everybody who's been in jobs. So what would your advice be for people then in that case?
Well, if you end up owing every year, you need to revise your W4, talk to your HR, get the new W4, and fill it out, completely to, get the
reflect the
accurate withholdings. Yes.
Right. Okay. So that's point to be noted. If you have, new withholdings, make sure, or new ways of earning. During the pandemic time, a lot of people started hobbies on the side. A lot of people started trading. There were a lot of things people were doing, making money on the side. Be sure to kind of, that must reflect and be, IRS must know about it. And like Dimple mentioned, talk to your HR and refresh your W4 so that the correct amount gets reflected, right? Right, Dimple?
Yes.
Yeah. Okay. All right. So there's another question. Before I take this question, just want to reiterate, we're live on LinkedIn, YouTube, and Facebook. So if you have any questions, please keep them coming. We love to answer them here. The discussion that we are having today is for informational purposes only. It does not create a client and CPA relationship of any form. If you have specific questions related to your individual case, be sure to send us an email, info@chugh.com. That's info@chugh.com. Our CPA from our LA office, Dimple Sankhla, is with us today. Dimple, this question. Now, child tax credit came as a relief to many families across US when they needed it most during the pandemic time, right? Cash crunch. Now, yet they owe more money to IRS this year. I know you touched briefly upon it, and I guess this is what this person wants to ask. I claim my 3 minor children, but still my refund is lower compared to last year. I just don't understand. What is your advice?
Well, the refund could be lower due to many reasons. Firstly, like I said, that there was half of the child tax credit was an advance payment. It was paid on a monthly basis, and so it wasn't a lump sum. So it probably just didn't feel like you were getting substantial money. And of course, it reduces the refund at the end of the, when you're filing, because they've already given it to you in advance. So you probably feel that you didn't get enough. And then the second point could be earned income tax credit, because although you may have had the same amount of earned income, but if you had like any other kind of income, like you said, maybe you did a small business, maybe you traded, you made more income where the threshold does not qualify you anymore to get the earned income tax credit, and that's probably one of the reasons. I need to know more to answer this specific question, but I'm thinking these could be, related.
Yes, this is why. Yeah, this is why tax experts, people. This is exactly why you need an expert advice. People fill using a lot of online platforms that are available. They fill in their taxes all the time, and sometimes they don't. There are a lot of nitty-gritties, that an expert can take care of for you, which people can't on their own, right? Because you need to know, they're experts in their field for a reason, right? Dimple, we have another question. My child's father claimed him in his taxes last year and received stimulus and advanced child credit. What can I claim this year? We were never married. Now that seems like a complicated situation to me.
Yeah, so this is a very common scenario again, where parents claim the dependent in the odd years, like, they rotate it. So, say a parent claimed somebody in 2020, and now the other parent is claiming in 2021. The parent claiming in 2021 can definitely get the full child tax credit, even if they didn't receive the advanced child tax credit. No, it's not double dipping. The parent who claimed in 2020 should have unenrolled from claiming the advanced child tax credit, knowing that the other parent was going to claim in 2021. So yes, while you're filing, go ahead and claim the entire child tax credit, including the advance payment that you did not receive. The other parent may receive a notice owing what he shouldn't have received, but we don't know about that. But yeah, you can still claim the entire amount.
Right. Now, that's interesting that you mentioned unenrolling. If a parent has received credit for 1 year, yeah, they must unenroll the next year so that the other parent can take advantage of the child credit, right?
Well, unenroll from the advance payments. This is a very new scenario, right? There were no advance payments before 2021. Yeah. So, yes, they should have unenrolled from receiving the advance tax credit, knowing that the other parent was going to claim the child. But they did not, and they received, but that does not, make the other parent ineligible for claiming the full tax credit. The other parent has the full right to go claim the entire credit. And we're hearing, and the parent who actually received it will eventually probably hear back from the IRS claiming back the money.
Yeah. Well, it gets complicated in situations like these if a parent doesn't own up to their responsibility and unenroll themselves from the,
It does. And it's so new to everybody, including us, CPAs, that there's always, more learning to do. And then we're going to see how the IRS, they're gonna come out with some kind of a decision as well how they're going to deal with it.
Absolutely. That brings us to the end of our discussion today. That brings us to the end of our conversation today. If you have any more questions for us, info@chugh.com. That's info@chugh.com. For more such content, please subscribe to one of our channels. Wherever you're watching us, LinkedIn, Facebook, or YouTube, be sure to like, subscribe. I will be back next week with another guest on Thursdays Live with Chugh, and we will discuss another topic. Could be immigration related, could be business law related, or could be a CPA again, giving you some tips. Oh, actually, Dimple, I see we have 2 minutes left. Why don't you give some advice to people, very quickly for next year, so that they can be in the know.
Right. And my only advice would be to reach out to your CPA earlier in the year, before the year ends, so they can assess your situation, advise you if any estimated taxes need to be paid. Don't wait till the deadline. Reach out to them so they can, they can assess everything and give you the right advice and help you mitigate anything if possible, help you plan it better. If there's any, 401k that can save you money, or there's many things that, you can do to save taxes by planning it ahead. So yes, do reach out to your CPA much before the year ends.
All right. On that note, I will see you next week. You guys have a great week ahead. As I like to call it, today is Thursday, which is a Friday Eve. See you next week. Take care.